Every week, millions of people move home, and as it's one of the most stressful things that you'll do in life, you need to get it right. I'm Rebecca Jane, and together with the region's best property experts, we'll be giving you some top tips and expert advice, shining a spotlight on a different area from across the Midlands, and getting to know a little more about our guests and what they look for in a home. Property is ever evolving and always a fascinating subject. We'll guide you on what you need to know and what you need to look out for here on Midlands at Home. Welcome to Midlands at Home. On this week's show, we're going to be talking mortgages. So whether you are a first-time buyer, remortgaging or an investor looking at a buy-to-let, we're going to give you lots of advice and discuss this vast and ever-changing subject area. My guest this week is Jeffrey Potter from Jeffrey A. Potter & Co. Jeffrey, welcome to Big Centre.
Hi, how are you?
Good, how are you?
Excellent.
Thank you for joining us.
Yeah.
Tell us your story. How long have you been in the industry?
Oh, gosh. Ever since I left school, I worked for a building society, got promoted to a manager on the mortgage side of things. Then joined a very large insurance company, Legal & General, and in 1990 I formed my own company, Jeffrey A. Potter & Co. Independent Financial Advisors. And
it's a big area. It's also quite a daunting area for a lot of people. Thinking of getting a mortgage, think of remortgaging. It's a lot to think about.
It is. I started in 1990. That was when we had the last recession.
Yeah.
Mortgage rates were above 15%.
I know, it's crazy, wasn't it? Did that happen for a couple of days?
No, a lot longer than that.
Was it?
Yeah.
Gosh, 50, you can't imagine that now, can you? When you see how good interest rates are now, you can't imagine it was so high.
Frightening.
Yeah.
It was a terrible time, but people got through it. But today we've got rates, well, they're the lowest they've ever been.
Yeah, there are some fantastic deals at the moment, aren't there? And are there different products, would you say, for different people?
Yeah, there are. Some of the lenders target the people who've got a large deposit. Some of the lenders target the first-time buyers. And in the main, we're able to deal with all of the lenders because we've got access to every conceivable deal.
And that's the beauty of an independent financial advisor, I suppose. You can look right across the board to suit your clients.
Yeah, I think what is interesting about that, we saw the implementation of the Mortgage Market Review last year by the Financial Conduct Authority, and it seems to be today that more and more people are talking to people like me for mortgages rather than going direct to the providers.
Right.
Because we've got access to every single deal.
Yeah, and I think we want a deal nowadays, don't we? We want the best deal, we want the best product. And do you think maybe there's a bit more information nowadays to what there might have been back in the day as well?
Yes.
People can do their own research.
Well, people do their own research, and they come to us with that information. But we've got sourcing systems that we subscribe to, which are far more comprehensive. And not only do they access all the deals, they access all the products, the main criteria, and we can give the customers much more information based upon what they're looking for and what they're trying to achieve.
Yeah, so it's tailor-made exactly for your clients' needs. And it's really, I suppose, holding their hand through the whole process. Like I said, it is daunting, it is nerve-wracking. It's a long process as well, so for some people. So it's about finding somebody that you can trust, and somebody like yourself is brilliant because you can then guide them in the right direction.
Yeah, it is a long drawn process. And of course, buying a property, particularly for the first time, the matter's got to unravel.
Yeah.
And that can be daunting. So we liaise very heavily with firms of solicitors. We advise our clients accordingly. And the process can be quick. It can be drawn out.
And what are we looking at? Quick and drawn out. So how quick can you get a mortgage nowadays?
Well, you could turn a mortgage around in probably 4 weeks if needs be.
Yeah. And other cases, how long, has it gone on for?
Well, crikey me. We've had cases that have taken 6 months.
Oh, wow.
Or longer, maybe.
Yes.
But those are exceptions. Yeah. That's possibly where there's been problems with, say, boundary disputes, maybe. Maybe they've lost the property and they've had to go and find another house to buy.
That's it. Different circumstances, different people. And what about, there's different types of mortgages. There's the interest only, there's repayment. Can you break it down for us a little bit on the different types?
Yes, I can. Under the Mortgage Market Review, the Financial Conduct Authority changed the goalposts quite significantly. Interest-only mortgages prior to that were easy to obtain, and a lot of people had them, and a lot of people still got them.
And is that because the payments then are lower each month? You know, you're not going to have that big outgoing every month.
Yeah.
So it's...
But today, if you want a mortgage, it's got to be on a capital interest only basis, unless you do a buy-to-let.
Yeah.
Or unless you're a little bit older, maybe.
Okay.
And you can get interest only mortgages, providing you've got about £150,000 worth of equity.
Oh, wow. Right.
And the lender who springs to mind, bit of a plug for them, is the Dudley Building Society.
Oh, right.
And we've actually got a deal in with them, as we speak, for a lady who's 69 years of age, would you believe?
Oh, wow, really?
Yeah.
Good for her.
Yeah. Well, she can really only afford interest only.
There we go. And then you've got the repayment. So if we can just discuss that side of things as well. You've got the interest only and then repayment.
A repayment mortgage, that's the typical type of mortgage today. What we've seen is more flexibility with the repayment mortgages. The lenders are quite aware that first-time buyers want to keep the cost down to rock bottom,
Yeah.
particularly in the early years, if they're going to get engaged, get married and start a family. So we can get mortgages, would you believe, right up to a 40-year term now.
Wow.
Years ago, 25 years was the norm.
Yeah, that's right, it was, yeah.
Today, you can get 40 years. But what we're saying to our clients, if you take out a 40-year mortgage, let's review it in 5 or 6 years' time, because if your income's gone up or your circumstances have improved, let's shave 10 years off
That's
and
it.
get it back to...
We want to clear our mortgages as quick as we can at the end of the day, don't we?
I think so. But first-time buyers, even with low interest rates, cost is a vital issue.
Yeah, definitely. And how much can you borrow with your salary? How much times your salary can you now borrow?
Well, that's another interesting question. And it's a good reason to talk to an independent, because different lenders have different criteria.
Yeah.
Probably the best income multiplier you can get today is 5 times your income.
Gosh, that's a lot, isn't it? Because I'm sure it was it 3 sort of 10, 15 years ago?
Well, when the rate was
5?
15%,
Yeah,
you can imagine.
True. Yeah.
But 5 times single or even 5 times joint.
Wow.
However, under the Mortgage Market Review, the lenders now have to work off a calculator. So they'll take other aspects into consideration.
Okay.
For example, if you've got a loan, if you've got credit card balances, they'll come off your borrowing capacity.
And that makes sense, really. To me, that's quite logical that they look at the overview of what you're earning and then other things going out. That seems a little bit...
Well, yes, it is right, because if you've got £300 a month going out on a loan,
Yeah.
you can't use that on a mortgage payment.
Exactly, yeah.
On top of that, of course, what they also do is cost out children
Oh, right.
and cost out partners who aren't earning.
Okay.
So although you've got the 5 times income multiplier in place, these other factors come into the fore, and it could reduce your borrowing capacity. So the best bet is to go and talk to an independent.
Exactly, yeah.
He'll tell you where you can get the loan, how much you can borrow, and point you in the right direction as far as that's concerned.
So do you think, although you can now borrow 5 times the amount, is it a little bit stricter on the borrowing? Do they look at all these things that maybe years ago people didn't have so many loans? Are they now looking at things that they didn't look at in your experience 10 years, 20
Yeah,
years
well,
ago?
that's another interesting question, because all the lenders utilise one of the 2 big credit agencies, Equifax or Experian.
Yeah.
So when you're inputting an application online particularly, and that's with the big providers, of course, they're not only assessing the application, they're doing a credit check as well. So if the client misses out on, say, a credit card balance, they'll pick it up.
Yes, yeah. So you can actually join these agencies as well now, so you can actually see your credit score and kind of be prepared as well. So what about first-time buyers? What advice would you give if you're thinking of buying your first home, first investment? What advice would you give to them?
Most definitely go and talk to an independent. I'm not saying that because I want people to come and talk to me. I'm saying it because there's a lot of deals out there. A lot of people aren't aware there's 95% deals. There's even a couple of lenders who will consider 100%, would you believe?
Really?
Oh, yes.
And I bet you didn't know that wasn't the case 10, 20 years ago. That must be a new thing, 100%.
Well, no, we had 100% many years ago. Northern Rock would do
Really?
100% and even more, but they paid the price for that.
Yes.
But if you go and talk to an independent, he'll tell you where all the best deals are. There's an abundance of 95% deals, so it's only a 5% savings. There's only 200% deals I can think of, but they're both parental assisted. which is a bit complicated. And you'd need to talk to an IFA to run you through that. But there are plenty of first-time buyer deals. The one that springs to mind currently, the Little Bath Building Society have come out with a 3.69% 3-year fixed rate deal.
Oh, brilliant.
Up to 95%.
Oh, that's great.
And we're recommending them.
Yeah,
Because
excellent.
today, maybe not next week, but today, it appears to be the best deal in the marketplace.
Oh, gosh. So I think, some people say it's harder to get a mortgage nowadays, but it's really just getting the right advice from someone like yourself. It doesn't have to be tricky.
It's not tricky any longer. Again, the governing authority have made us be transparent, so explain it thoroughly to them. And it's pretty clear what we say.
You're staying with us, so after the break, stay with us because we've got this week's Spotlight area and more on Buy to Let. See you in a few minutes. This week's Spotlight area is Edgbaston. Edgbaston is an area in the city of Birmingham, around 2 miles from the city centre. It curves around the south and west of the original town of Birmingham and is bordered by Moseley to the south-east and by Smethwick and Winston Green to the north-west. Edgbaston traditionally has a reputation for being one of the most upmarket and affluent parts of Birmingham. It's fair to say the population of Edgbaston has increased dramatically over the years. In 1801, there were just 1,000 residents. By 1841, this had increased to 16,500 as a result of wealthy manufacturers moving to the area. By 1850, 29 roads had been laid out and uninterrupted growth continued. Nowadays, there are approximately 24,000 people living in Edgbaston, which has come a long way from the 1,000 residents over 200 years ago. The 19th century saw the area being under the control by the Galthorpe family, who refused to allow factories or warehouses to be built in Edgbaston, thus making it attractive for the middle class. Edgbaston holds memories of England cricket test matches and Warwickshire County Cricket Club. The area and many of Edgbaston's neighbouring areas are some of the more picturesque parts of the city. Edgbaston is also home to the University of Birmingham, which was actually established as Birmingham Medical School in 1825. The university is set in 250 acres of lawns, mature trees and walkways, contributing to the peaceful atmosphere. Property varies in Edgbaston, but it is true to say that you will certainly find some truly magnificent properties. Some of the most expensive, sought-after properties can be found in this prestigious location, where prices can set you back a few £1 million. J.R.R. Tolkien lived in Edgbaston during his teenage years, and the 2 towers of Edgbaston, Parrot's Folly and Waterworks Tower, are said to have provided inspiration for part of his Lord of the Rings novel. Edgbaston has so much to offer, including many churches, renowned schools, and of course the university, alongside being so close to the city centre with fantastic transport links. There's also a choice of restaurants and pubs too. It has been voted in the past as one of the top 101 places to live in the UK, and some have said that Edgbaston is Birmingham's answer to Kensington. With its leafy suburb and picturesque surroundings, it really is a beautiful place to live. The lovely area of Edgbaston. Now, before the break, we were talking to Geoffrey Potter from Geoffrey A. Potter & Co. Geoffrey, welcome back.
Thank you.
Now, I have to say that this is a business that must surely keep you on your toes on a daily basis.
Oh, gosh. You won't believe the hours we have to work to make things happen. I think I'd probably do about 60 hours a week, maybe.
Oh, really?
Yeah, I think so.
Yeah.
But it's good because we're looking after people's interest. We're making their dreams come true, which is great.
I was going to say, when you get that phone call or that email, do you tend to get an email or a phone call from the vendor saying the deal's gone through?
Both.
Yeah. That must be a great feeling then, having, you can call your client and say, guess what, your mortgage is through.
Yeah, it's an interesting one. If we get a mortgage offer out on a Friday, then I'll definitely ring the clients.
Yes.
Make their weekend.
Yeah, definitely.
If it doesn't come out, we won't bother ringing.
No, no, definitely not.
Yeah.
Now, a big area is buy-to-lets, and I think a lot of people nowadays, now we've heard the result, of course, from the election, people feeling a bit safer perhaps with property, more and more people investing. Let's talk a little bit about buy-to-let mortgages and how they work.
Well, the buy-to-let market has been very buoyant for a long time. It will continue to be buoyant, particularly since, the Mortgage Market Review has done that. And there's lots of landlords around. There's some great deals. There's quite a few lenders that are heavily into the buy-to-let market. The Nationwide, through their own lending arm called the Mortgage Works, they've got some cracking deals.
Because you need to get a buy-to-let mortgage, don't you? You know, if you're thinking of getting a property, you have to have the right mortgage in order to rent it out.
Yeah, there's significant criteria on buy-to-let. It's normally restricted to current homeowners, although we are seeing a couple of lenders coming up with first-time landlords, which is good.
Yeah.
You probably need a 20 to 25% deposit.
That's the only downside, I suppose. You've got to have that deposit.
Yeah.
There's no way of getting around that. You've got to have that deposit.
I can't think of a lender that'll do more
fair
than
enough.
that, really. You might get one or two of the fringe lenders that'll maybe do 85%, but there'll be a hefty fee to pay, which is where
Always a
we would look at it. Yes. But the criteria for buy-to-let is quite straightforward. Find a property. The lender has three sort of rigid criteria. They'll value the property as one.
Okay.
They'll assess the achievable rental income.
Right, okay.
Okay? So you've got to know what that's all about. And they have their own format for working that one out. And then the value will also be required to assess, is the property in an area where it will regularly rent out?
Right.
So that's the major criteria.
Yeah.
Other criteria, you've got to have an income, and that's now normally between 20 and 25,000 per annum.
Okay.
So if there is a void rate period, you can cover the interest, and the lender will accept payment of interest only.
Ah, right, okay, that's good, isn't it?
That's really only on buy-to-lets.
Yeah.
So it's a nice product. Landlords are buying, the rent's being paid, the property's got to be valued, so it's a good investment for the future.
Yeah.
Pitfalls maybe, capital gains tax liability.
That's true. Is that when you sell?
Yes, it could be.
Yeah. So I think there's just lots of things to look out for. But again, by using somebody like yourself, an independent financial advisor, that's where you can, particularly if you're looking at getting your first buy-to-let, that you can be guided through the process, because it's a bit of an unknown when you're starting out, isn't it?
It is. I think the thing to look at buy-to-lets, there are some very heavy fees, arrangement fees, which they'll say, well, we'll add it to the mortgage, but they're there.
Exactly. You can't escape them, can you?
And we'll spot them. We're not very happy to pay the lenders big arrangement fees, and some of the smaller lenders have got very small fees. So again, using the sourcing system that we've got in place, we could tell the buy-to-let purchaser where the best deal is and all the criteria that goes with it.
Yeah, definitely. I mean, there's lots of products. Talking about fees then, you've got, can you talk us through the whole process of what you should expect to pay? You mentioned arrangement fees. Is that something that is with every product, whether it's a buy-to-let or repayment?
Well, if you're on a purchase, you'll normally have an arrangement fee on a buy-to-let, which could range from as little as £500 to maybe £3,500.
Yeah.
Depends
And you
on the
can
loan.
bolt that on to your mortgage?
Most lenders will add it, yes.
Yeah.
You'll normally have a valuation fee, which could be quite hefty with one or two lenders, £500 or £600 maybe. There could be a booking fee.
Yeah.
The broker will want a fee as well.
Yeah.
To process the paperwork. But the lender will normally pay the broker what's called a procuration fee for introducing the work.
Yeah.
Then, of course, you've got legal fees. But again, the broker, the IFA, he will go through all of those. He'll produce what's called a key facts illustration, and all the fees will be listed on there.
So you can sit down, you can go through it thoroughly,
Yeah.
so you know what to expect. There's nothing worse than hidden surprises when you suddenly think, oh, £500, where am I going to find that from? So it's all broken down nicely.
One of the good things that's come out of the mortgage market, everything is very transparent. It's all in English that people can understand.
And that's what we want. We don't want all this jargon which we don't, can't understand, and you've got to have it all broken down. So it's nice plain English is all we want.
Yeah, and the key facts illustration, which is the crux of the deal in terms of what you give to the client, spells it all out. Even the early repayment charges are spelt out in simple, plain English.
Yes, and you need to be aware of that really, don't you? So, yeah.
Yeah, it makes our job better. It makes the relationship with the client easier, and you can move forward then.
Definitely. So what advice would you give them? What are your top tips for people looking at getting a mortgage, whether it's buy-to-let or whether it's repayment? What advice would you give?
Well, I'll be biased. There's no question about it. Go to a qualified independent mortgage advisor or an independent financial advisor.
Because you're not biased then, are you, I suppose? You are able to, that's why you're able to look at all the products.
The system I've got, which is called Trigold, which is probably the oldest in the marketplace, is very comprehensive. Most of the lenders subscribe to it. All their products are on there. Updates every day. If there's something new, it pops out. I think the one that I like, again, a plug for a little building society, I like the Monmouthshire Building Society from Newport in Gwent.
Oh, right.
When they come out with a deal, it is without exception the top deal in the UK.
Oh, wow.
And
Working hard then.
They only do quality, which is great. They like quite a large deposit, but the money be spent more or less immediately.
Gosh.
Because it's so popular, and it's good for the client.
Yeah. And what do you think, finally, what do you think is going to happen with interest rates?
We'll probably see a gradual increase, like we saw a gradual reduction.
Okay.
They came down in 0.25s. They'll go up, I think, in 0.25s.
Over the space of a few years.
Yeah,
then.
I think so. Let's not wreck the recovery. Let's keep the mortgage market buoyant. There's lots of houses being built. We've been saying to our customers for the last 2 or 3 years, get into fixed rate mortgages.
Yes.
Fix for probably 5 years or maybe slightly longer. It gives the first-time buyer the comfort of knowing their repayments aren't going to go up.
Yeah.
First-time buyers have got other things to spend money on, and I think it's the right thing to do.
Excellent. Well, thank you for your advice, and you have to come back and give us an update in the winter.
I'd love to do that.
All right, well, you take care. Look forward to seeing you next week for more on Midlands at Home.